This is Todd Herring from our services practice. I have in the room a number of folks on our panel today. We're going to talk about challenges and solutions surrounding waterfall analytics. So thank you for joining us, and we're going to follow standard webinar format here where you folks can hear us. We're going to try and have a conversation, talk about all the details of that. Hopefully it'll be an engaging conversation, and we'll put some polls in place where we're going to ask you for some information as we get into this, and then we'll open it up for questions at the end if we haven't addressed anything that you're looking for.
That's a show.
Yeah,
Notes apparently are being shown.
Oh, so I guess let's get that started. So there's also some background slides here that you'll be able to see as we go through this, really kind of just guiding the conversation. So apologies for that not being up, but this should be up now. All right. So I want to introduce our panelists today, or have our panelists and discussion participants introduce themselves. We're going to start down the line and actually go from my left here. We're not quite in order of the photos, but I think it'll make it easier for us as our conversation goes. So Rob, if you want to introduce yourself.
Sure. Rob Siegel. I'm a director at KKR in our information technology department, responsible for our private markets technology, inclusive of our fund partnership accounting platform, LP reporting, client services, et cetera. Have been in the industry for almost 18 years now in a variety of roles, working for consulting firms, software vendors, and now, of course, a fund sponsor.
Good afternoon. My name is Jason Donner. I am the CFO at Veritas Capital. Veritas Capital is a private equity firm that invests in companies that provide critical products and services to government customers. And this has been the firm's exclusive investment focus for almost 20 years. In February of 2017, we closed our 6th fund.
Right. Yes, Chuck. Yeah, my name is Chuck Dooley. I'm the CEO and co-founder of a fintech software cloud solution provider by the name of AccordIQ. Just in the way of background, my co-founders and myself started a company about 5 years ago. All of us have well over 25, and I won't say more than that, but it is in fact true. So we all come out of the asset management space, both with deep technology and business background, which is very germane to this topic. And just lastly, we've been spending a lot of time in those 5 years to date, working with both LPs and GPs and their partners and addressing these issues and delivering a myriad of service, everything from training on carried interest through modeling and calculation. So we're very excited to be here.
I'm Tony Schmidt, director within our consulting services group here in San Francisco. Thanks, Todd, for moderating, and thank you for our panelists who have joined as well, in addition to the participants on this call. I have over 12 years of experience working in private capital, and over this time, I've really worn 2 hats. Number one is accounting and finance functions within a private equity firm as well as a fund administrator, and 2, working in the consulting world within FIS and Vestran, and now with SteelBridge. I'm based on the West Coast in San Francisco, and it's a pleasure to be back here in New York. So looking forward to the perspectives that are going to be shared on today's call. Thank you.
Great. Thanks, everybody. So also just to note, we had James Hluschek join us as my partner at SteelBridge, and he's in the room as well. So thanks for
glad to be here, guys. I'll try to be quiet since we've got so many esteemed peers in the room, but I appreciate you all joining us and being on the panel. And as Tony said, we appreciate everybody listening in today. So it should be a good discussion.
So we're going to start our conversation here with some questions or some polls. So I'm going to send those out here and get started on getting some information from the folks that are on the line. Our first poll here is, do you have an automated or manual solution for building your waterfall analysis? So I'll give you a moment here as we start our our kind of conversation around this, and as we start to get our answers. Looks like we're halfway into the votes, and we're at 62% manual, which is an interesting statistic here. We're going to close the poll and move to our next one. So our next question is, if you have a manual solution, which we saw a majority of the folks on the line do, how many hours did you spend building that model? Please key in your responses. We're getting a good number here, which a majority of folks have entered, and just for the folks in the room, more than 3 hours. So our choices were less than an hour to 2, 2 to 3, or more than 3. Most of those answers are more than 3 hours spent on this solution. So we're going to close this poll and move to our third item here. And this is, if you have that automated solution, so that other 20% that's in there, is the solution pre-packaged, or did you custom develop this for yourself? So again, please answer. And
pre-packaged meaning out of box available.
Right.
Immediately.
Right. Yeah. So we're going to close this one as well, and this is a majority percentage of custom developed solutions. And then our last question is, are you looking to automate in the near future? Right? So if you haven't already, or you have a manual solution, or even a custom solution, are you looking to make a change with that? And what's your time frame for that? The first answer is just no, you're not going to do that, or is this in the imminent future, within 6 months, 6 months to a year, or longer than a year? So the votes are starting to come in on that, and interesting for our panelists here, the majority answer on this one is 6 months to a year. So that not imminent, not tomorrow, but within the next year. We have about half the group answered. So I'm going to close that poll, and I'm going to turn this over then to Tony to talk about our overview on what we're looking to do and talk about with the analytics.
Yeah, thanks, Todd. Some interesting statistics there. That was actually a lot higher percentage of people than I thought would be using automated solutions around that. So a couple of other interesting stats there. But yeah, would like to talk today about 3 topics, really homing in on the challenges and solutions surrounding waterfall analytics. Number 1 is validating the mechanics, thoroughly understanding and building a concrete interpretation of the distribution policy that's typically stated in your limited partnership agreement. Offline spreadsheets, so we saw that 62% of the folks out there are leveraging Excel probably. So talk about some of the challenges and solutions around that. And then there are becoming more of opportunities around leveraging enterprise systems, as well as other additional tools that essentially allow you to plug into whatever systems you have to aggregate and pull and analyze waterfall statistics. So I'd like to go in through each of these one by one. Number 1, I'd like to go into the validating the mechanics. So, when we speak about waterfalls, with our peers, with colleagues in the industry, we typically keep it high level, right? But when you break it down into the fine details and the specific components that really drive the waterfall, differences in interpreting the waterfall can be converse. So, components on the distribution policy stated in the language contained in the LPA can be interpreted in many different ways. And the consequences of interpreting in different ways could have very detrimental impacts on your reporting. We're talking about investor level reporting here. So it's a very sensitive area. So when interpreting the waterfall policy, it's just imperative that you're uniformly able to create a consensus and understanding and agreement on how that waterfall is interpreted. There may be instances where the accounting and finance group interprets it one way, and then the investment team, internal, external counsel, has another interpretation. So number one is really just getting agreement across your parties. So taking action towards collective agreement on understanding the waterfall. And this thinking is about the typical standard transactional events that have occurred in prior funds or that you anticipate occurring, future in the fund, or any unexpected results, kind of layering out those transactions, how they look, and what's the impact. How does your interpretation of the waterfall feed that information? The second one is, if you're using a fund administrator, and I have fund administration background, is you may be able to leverage them by comparing your analysis, coming up with your own interpretation of the waterfall, and then benchmarking that against what output they're showing. And that gains you the additional assurance. And I'll talk a little bit more about fund administrators later on. Number three is validating your model that has similar language in a prior fund. So if you already have a model set up that handles Fund 3 and you open Fund 4, you created a model for Fund 4, try to validate that against a prior fund's information. Number four is validating your model by using an independent third party, such as your auditors. So if you have a new fund or a brand new fund and it has a very twisted distribution policy and you need that extra comfort and assurance, reach out to your auditors or other independent third parties, consultants, to gain that additional assurance. Number five is ensuring that you have the right resources in place to manage waterfall analytics. This is the bread and butter of the fund, so you want to make sure that you have the right people in place to manage the waterfall. Instituting a second set of eyes to confirm waterfall results doesn't hurt. And the last thing, but definitely not the least important of the six, is documentation. I can't tell you how many firms have all of the mechanics and understanding of the waterfall floating somewhere in their heads. Nothing is documented. And so what is critical is to be able to put that on paper. And it's just not the mechanics of the waterfall, but if you're using technology, you're using systems to generate and drive that data, you need to document where that data is coming from the GL, what reports are driving that. There are changes that may be made with the waterfall, and you don't want to have this situation where it's a black box and you're just blindly going in trying to fix something. If you have documentation, you're going to be able to pinpoint exactly what needs to be fixed and addressed.
So let me tell you our process. So we just raised the fund early in 2017, and as part of the process, we model the waterfall at the commencement of fundraising, because a lot of investors wanted to understand the mechanics and wanted the firm or myself to take the investors through the mechanics of the waterfall. So we spent significant amount of time with counsel going through the model, going through the analysis to come up with the model. Now that model was a higher level model, so it didn't get into all the guts and details, but it was a good starting point to have a conversation. And once we closed the fund, we went and did a full-blown analysis and all of the details, and spent a lot of time with counsel, with our auditors, validating all of that.
Great. Thanks, Jason.
And just for the folks on the phone, that's Jason's voice that's chiming in on that particular approach.
Great. And just moving on into offline spreadsheets, the reality out there, no matter what size you are, and I see this across PE shops of all sizes, that you're still leveraging spreadsheets to tackle waterfall analytics. You may or may not have an enterprise system, the Altas, the InvestTrans, the eFronts of the world, or a tool to leverage that provides some degree of automation. What you're doing is you're doing a data dump from one system, or pulling it from multiple data sources and piecing the information together. That allows you to just really do step one, and that's constructing the waterfall. And after that, you're putting in the layers, the XIRR formulas, the goal seeks, and these challenges, just naturally surface several risks and inefficiencies. And so I'd like to kind of talk a little bit about a few risks and a few inefficiencies around that. So obviously, with the amount of manual intervention involved with building offline spreadsheets, it exposed some degree of inaccuracy. Flexibility, which we all love about Excel, we're all comfortable using it. That's actually the problem maker when waterfalls are not calculated in a controlled fashion. Another risk is, what if data changes in the main source and it's not updated in the model? We all deal with headaches around partner transfers, right? So you need to make sure that the data coming from the system that's been pushed through the waterfall has not changed during that period of time that you executed the waterfall. Another risk is around staff ownership. So you want to make sure that you're managing your resources and that a new owner that comes in, you may have turnover, and there's opportunities for somebody to misinterpret that Excel waterfall that you built. So there's a risk around standardization and consistency in how you interpret it. And inefficiencies can go on, but just going to highlight 3 of them. But the time it takes from beginning to end, this includes aggregating all the right information, constructing your model, validating checks, analyzing and interpreting output, booking the necessary carry adjustments, and rerunning the model to ensure everything reconciles. Repeat this process every single time you do a waterfall, and it's starting to add up. Lacking capabilities around hypothetical analysis. Capabilities like this exist with enterprise software and tools. For example, speaking to another client before, when they're fundraising, many investors are starting to, take a look at what does the waterfall look for a brand new fund 4 or 5 years down the road. What does it look like if we sell this asset at this enterprise value? What are the variables around GP clawback provisions, selling certain assets in the future? And so, you put a manual offline solution in place, and good luck. You're not going to be able to have those nice knobs and dials to control and automate that process. And then we all know that the complexity of funds just increases year after year on the capital side and on the investment side. So there needs to be more capabilities around multi-tiered levels, holdcos, and all this is done manually through an offline spreadsheet. So solutions around this, the obvious one is go out and get an automation put together, but that's easier said than done. What you want to do if you are limited with your resources and you have to resort to offline spreadsheets is identify and put in very important, several control checkpoints throughout the model. Your reconciliation checkpoints can reconcile to external reports, your financial statements, PCAPs, or else internal managerial reports that share similar data sets. In hand with this, ensure that you have the proper security around these files. You can't have the wrong users coming in and accessing this information, especially when you start talking about GP carry and you look at the members and all that fun stuff. Solution number 2 is kind of mentioned above, have a second set of eyes to ensure accuracy after round 1 model has been completed, especially during the earlier stages of the fund when you start executing the model. And then checks to ensure numbers agree between the system and the offline spreadsheet, assuming that the data is susceptible of changing in the truth data. So my point about, partner transfers, even valuation adjustments could come through that could impact the model. The last thing to talk about in my little section here is leveraging enterprise systems and tools. And I'd like to revisit that stat, 38% automated. And I bet that's probably a growing number over the past 4 or 5 years due to what we're seeing in the market and more demands coming from the GPs, as well as indirectly from the investors.
So Tony, I've shared that, the direct statistics where we're 65% manual to the group. So just so we're aware, that should be on your screens.
Sure. Yeah, thanks, Doug. So I know a lot of the folks on the panel here and some of you on the line, you're utilizing enterprise software, such as the Investran, the Altas, the eFronts of the world. What's important to know about your current system, as well as even when you're out there prospecting systems, is knowing what waterfall capabilities are either native out of the box, which we learned a little bit through the survey before, or can be offered as maybe an extension of the system. So you should really understand whether or not these solutions can be molded around your unique waterfall policy. And there was actually another stat where 78% of the automations were custom developed. So seems like everybody, we all think there's always a plain standard vanilla distribution policy, but when you look at it, with a microscope, through fund to fund, shop to shop, there are slight nuances that you'll see.
And I just shared that one with you as well for the folks on the line. It actually came up to 80% in the final voting there. So 80% are custom developed, 20%.
So when you're currently looking at an enterprise system, you need to ensure that waterfall analytics are at the forefront of your requirement list. That sometimes gets in the back burner because you're worried about creating reports, getting data in, reconciling the data. So if you're implementing an enterprise system, just ensure that you're exchanging dialogue with those consultants around how your general ledger may need to be created or configured in different ways to permit waterfall analytics. Solution 2 is vendors in the market. So if you're using fund administrators or prospecting one, ask them if they have waterfall solutions. I've been seeing announcements in my LinkedIn feed all about some of the various fund administrators that have developed their own proprietary waterfall analytics. So that's a growing trend there. And if a waterfall solution is not out of box with your enterprise solution, consider speaking with external consultants to see if there's any opportunities about creating your own unique internal solution. Research the market and explore who is doing some exciting things. I mean, there's a lot of different players out there. And I guess with that being said, I'd like to steer this over to Chuck, who would share a little bit about his firm, AccordIQ, and what you're doing in this space.
I appreciate it. Thank you, Tony. So one of the things that just the ground conversation, I just wanted to add, so as you were describing a lot of what I would call, so at AccordIQ, we've spent, as I said, a lot of time in the market with LPs and GPs and partners, fund admins, custodians, et cetera. So the good news, the encouragement is, I would say the ball's moving in the right direction. And what the stats that we've seen, I would corroborate with those numbers. So, but the good news is I think everybody's thinking about this, and a good portion of those are doing something about it. Now, the other encouragement, and this is where we fall, I think we sort of are on the far right of like really disruptive technology. But I want to come back to a very important point. Technology is great, best practice is great, there's standardization coming out, but at the end of the day, what we first started with is really thinking about it from a holistic point of view. So, while you think about technology, you should not just be thinking about, as you took through the whole model, right? From interpretation of LPs to writing them, to validating them, all the way through the various different steps. So we basically have hardened a methodology that we call a multi-step process. So I would highly recommend that whomever you're working with, whether it's our firm, your incumbent vendors or consultants, right? We're not the only ones that have come up with this, but you should think about what the end state model looks like for you. And then secondly, think about in each of those elements, right? Either you're integrating different technologies, best of class. Our approach, just to talk a little about what we've done, because I think it embodies some of those steps, has been to deliver pretty much a model that makes the whole process from start to finish. So from when you first either start a fund or you're in queue and you're now thinking about what do I do with my fund, how do I automate it, where do I automate, where do I introduce best practice, et cetera. So what we do basically is provide some very sophisticated software with advanced data platform, and we help with the seamless data flow and integration of the data up front. So collecting all the data, all the so it's very important to get the models correct. So you got to pull the transaction and static data from the LPAs. If you don't get that right, everything else goes sideways, right? As you highlighted. So very, very simply, I highly recommend that you think about it, regardless who you're working with, in a holistic standpoint. Number two, with our solution, right, we basically out of the box have, since we've done so much work on carry and the modeling, out of the box we provide pretty much all, because when you think about carry, the fundamental, it all starts at a hierarchical perspective. You have fundamental elements to every waterfall model, right? So our solution basically provides you some like a configurable approach where you have a drop down. So preferred, is it multiple, is it IRR, right? We've seen scenarios, more complex scenarios where it's including both IRR and multiple. So and then you get into splits and when those triggers for carry actually happen. So again, where the technology is going, I think we embody some of that, is that you need to start thinking about how do you make these things simple? Because if you do it correctly, right, and this is what we're striving towards, and I'll stop here, is the ability to be able to, the way it should be, is once you set it up, whether you're a new fund manager or a new fund within an existing, like KKR, et cetera, it should be as simple as once you set it up, it should be periodic, it should just be capturing incremental cash flows and NAV, and you should be pushing a button. And I say that a little bit of tongue in cheek that's pushing the button, but it should be that simple. And so the encouragement to you is that there are companies like ourselves, Investran, some of the front end, they provide models and consulting. So, the good news is that you should think about it holistically, and the good news is that there's companies like ourselves that are delivering and solving all the elements of, the challenges along each of the steps.
So quick question, Chuck. So I'm sure you guys have some standard templates that you guys have, right? The typical waterfall distribution policies.
That's right.
But you guys have the ability and the flexibility of the product to tailor that towards towards unique.
Yeah. So it starts again. So we have a sophisticated team that's led by Maria, who just put out a third textbook on carry, just for those of you who have interest. And so with her guidance and our business team, the key is to get the right provisions and the syntax. But to your point, through our software, all of that is information that can be changed on the fly to do what if scenarios, hypothetical scenarios. I know Jason, you were talking a little bit about that you're doing that in your implementation. So we give you that ability, and we can also do that at management fee level as well. Okay.
How long does a typical implementation take? I'm assuming it's different if it's a new fund versus a fund that's been around for some years.
It is. So so I'll break it down. So getting the data, depending on the size. So typical size of a fund is a couple hundred investors in a fund type of thing, and so it's not months, it's weeks in order to set that up. So we've gotten very proficient. We're even using technology on the front end to read some of the LPA documents, because even though you have, like if we started today with you and it's an existing fund, obviously, the key about this is that we're going to come in with our own fresh eyes to be able to interpret the LPAs and then do sort of reconciliation if there are any gaps in understanding of the LPAs and the arrangements. So that's part A. Then part B is the modeling is fairly straightforward, because again, out of our box, we have basically built and codified a lot of the models already in the platform. So unlike where you're taking a model and you're tweaking it, of course we do that when we get into more complicated, because again, things change. But in order to do that, a days, not weeks or months. So I hope that answers your question.
Thank you.
Yes.
And I think we can get into a little more of the other solutions and other things that are happening. So we're going to move now, actually, Jason, over to you and let you give kind of the background. I know you've spoken a little bit to the group, but give us the background on Veritas and what you're doing over there, what you're looking at for the future. You're in a specific role as CFO, and not having an automated solution today, but you have a lot of standards that I think would be interesting.
Sure. Chuck, you'll be happy to hear this, that my thinking on this topic has changed over the last year or so. And really the primary driver to that is the need to supply more information to our investors and to management of the firm. Historically, the waterfall model has been event-driven, right? There's a realization, you run or you prepare the waterfall model, or at quarter end for financial reporting, and then that was really all you used it for. And because of that, at least for us, it's a very manageable process. And if you look at Veritas's investment profile, we're making control investments, they're large equity checks, 10 or so portfolio companies, so not the investment volume that other firms are seeing out there, so very easy to control. And we were, because of that, we were able to put strict policies and controls around the modeling. And it's allowed us to make sure that there's control over file access, over data sources, and also data integrity. And then some of the things that we put in place are password protection, and I'm sure all the folks on the line do the same thing. Password protection, we've limited access to our network to only the folks that are going to utilize the waterfall model. We've built a series of checklists, internal checklists that we use, and there's controls and approvals throughout that, and then obviously reconciliation with our accounting system. So that's all worked very well. But over the last year or so, we've been utilizing the waterfall differently. We're utilizing it as a tool for different business processes. One of the things that we do a lot of is what-if scenarios. So potential realizations, follow-on investments, what does this mean from a returns perspective? What does it mean for the firm, the fund, et cetera? So we're doing a lot of that. And because of our investment structure, once we have this information, we have to flow it through the whole investment structure. So that means multiple waterfall models. And then if your fund economics timing is different than your GP economics timing, further analyze at the GP level. So a typical what-if scenario could take hours, if not days, after you go back and forth and analyze it.
Now, I'm just curious, this is Chuck, by the way, are you using sort of just taking an existing model and then tweaking it? And
yes, that's what we've been doing, and that's part of the issue and part of why my thinking has changed about the fact that we need to go to an automated solution. So what you do is you have a standard model, and then you're going to use it for a what-if analysis, so you make some changes. It's basically the same information, but you're making some changes to it. And then next week you run various tax analysis, right? So you're running things like book to carry differences, book to tax carry differences, GP tax distributions and things of that. So now you're taking the model and tweaking it again. And then over time, you have multiple versions of models on your network, and what's the last version control, and all those types of issues. So those are certainly things that we need to eliminate in the organization, and quite frankly, we need to eliminate that in the industry. Just to give you another idea, we do a lot around clawback analysis, right? So clawback has gotten a lot more complicated over the years, so we're modeling out clawback scenarios. And we will use that a lot to determine how much we have to escrow for GP carry, when we're going to release GP carry, when we're going to escrow additional GP carry. So it's really become a tool for all these different scenarios. What I would say is if you're using your waterfall model similar to how we are, you should strongly consider an automated solution. So as you can see, we have an Excel-based model. It's integrated somewhat with our accounting system, but we are definitely going to move towards an automated solution in 2018.
Thank you, Jason. Rob, we want to come to you next, and you kind of present a different perspective on this with your more formal automation and heavy technology focus in your role.
Sure. So just at a high level, and I'll work backwards, but I would consider our infrastructure at KKR as it relates to waterfall reporting and calculations as somewhat advanced along the curve in terms of our automation and control around that. We are a InvestTrans shop where it is the single source of books and records for all of our fund and partnership accounting. And our reporting suite is a library of Excel add-ins that we offer our finance users, which is about 200 plus Excel add-ins that we leverage Excel through .NET code with direct connectivity to InvestTrans, in which that data is then being brought into Excel and then automatically calculated, formatted, etc. And we use that same model for not only our financials and supporting schedules, but also for our carry models as well. And the reason why we do that is we have the appropriate controls in place as it relates to the underlying data in InvestTrans and the control around when things are signed off on and ready to be brought into the appropriate reports. And then on the Excel side, it really gives us that full transparency. So there's no black box associated with this. And let me just pause right there, because when it comes to that Excel model, our approach has always been a bottoms-up approach. And what I mean by that is when I think about a waterfall model, whether it be the hypothetical accrual or even a cash, I think of it as like a 20-step calculus problem. And steps 1 through 5 is making sure your data is right. Now, it sounds simple, but if you don't get steps 1 through 5 right, there's no point in going on 6 to 20. And so what we've seen is, something as simple as an incorrect effective date or a misuse of a trans type, whether it was return of capital or return of unused. Those have a compounding effect, and you're just going to get, if that's not right, there's no point in moving forward. So we put a lot of focus and a lot of control in on the underlying data. And within our models, if I think about our accrual or cash models, if your resulting output is an Excel file, it could be somewhere between 6 to 8 tabs. And a lot of those tabs are what I would consider reconciliation or control tabs. So as an example, one of those tabs that we have in both an accrual or a cash model is what we call the capital detail tab. And in that tab, for every single capital transaction, by date, by journal entry, by batch, including the comment, including the deal, for every single partner, we give the full transparency down to the underlying debit or credit.
Like an audit record, underlying audit record.
It's exactly what it is. And so that is, when you start walking through the other tabs in which the waterfall is actually doing its calculations, you can always go back to and have full transparency to the underlying actual entry in InvestTrend. So when I talk about that bottoms-up approach, there's your raw data, and then within that Excel model, we're literally going through step by step and allocating fees and returning fees and doing our IRR and prep calculations, and then bringing all that data in across multiple tabs into our ultimate waterfall tab. And then eventually, any carry that's calculated, whether it be an accrual amount or a cash amount, we then bring back into a template that allows us to easily copy and paste that back into InvestTrend. What I will say is we've taken made some firm-wide policy decisions that are both what we believe to be more LP friendly and more admin friendly. Just as an example, most of our LPAs read on a deal-by-deal basis, where we're allowed to allocate our fees on a deal-by-deal basis and then take carry. What we've made a decision on is more of a European style, where return all fees first. And so mechanically, not having to allocate management fees on a deal-by-deal basis, we've made a decision, return all fees first before you move to that next step. And clearly that delays carry, but that's just something from an admin perspective has been much easier for us. Well, we've been using this platform for a number of years. We're fortunate, as you get the next generation funds, and the LPAs become very similar. And while it all sounds good, once you get into the details, we still have the challenges. Challenges around partner transfers, challenges around people not recording information properly. Not our most recent North American flagship fund, but the one just before that, that's just closed its investment period, had 17 different variations of LPs based on the close in which they came in. We don't true up our funds, their management fee percentage. So when you think about it, in a fully trued up fund, you could take a $1 million commit LP, put them up against another $1 million LP, and your first sort of sanity check is every single number should be the same. We don't have that. And so, in a fund that has 120 LPs, you effectively have 120 waterfalls. So, I think we're a good story in terms of automation and control, but there really isn't a silver bullet. You still need to have people who understand every single detail all the way down to the underlying debit or credit.
A comment first, and then a question to you, Rob. This is Tony speaking. It's interesting, the flavor of a European waterfall that you guys kind of built in. And a comment to everybody, it'd be interesting to have another separate roundtable discussion around the trends in waterfalls and where middle market, large market, private equity shops are doing. But question to you is, from beginning to end, how long did it take for you guys to put that solution together?
Yeah, I mean, we didn't clock in, clock out, but weeks. Right. I mean, we're not talking hours or days, it's weeks. And it's just because things change. Look, it's no surprise to anyone that our end users, as much of a controlled process we have in place with InvestTrend and our reporting, they still have their offline schedules. And so for the initial use of our automated carry platforms, whether it be accrual or cash, they're comparing that against their manual models. And that's their sort of, safety net, if you will.
How big is your staff, if you mind me asking?
So our technology staff is roughly 12 people. It is split roughly equally between 6 sort of business analysts, if you will, the other developers, and a lot of those developers, we use a third-party offshore development team.
Yeah. And to clarify, and this is James speaking, Tony, your question was about how long did it take to build that one model? That what you were referring to? And Rob, you responded with weeks for that one model.
Yes.
How about though putting that platform in place?
Right. So, I mean, think about it. We're fortunate where a majority of our funds use the same counsel. A majority of our funds use, you could look at, one fund and another, and the LPA, at least the part that relates to the waterfall, is a carbon copy. Maybe it's a different pref rate or a different carry rate, but those are just parameters that you plug in and you're going to get a different calc. So we are scalable in the sense that when we've built, model A, it works for funds 1, 2, and 3, and model B works for funds 4, 5, and 6. That being said, there are, your fund-to-one SMAs and, your real estate fund does it differently than your infrastructure fund, et cetera. So we're constantly in build mode.
Yeah, I would imagine it was a year plus to build a base platform.
Yeah, we are.
You're always tweaking to make it better.
It's always being tweaked. There's always one-offs.
Right.
So again, that's my point where there's no silver bullet. When I think about that team of 12 people, we don't time track per se, but I would say that there's always somebody working on some sort of waterfall initiative, whether it be a net new development or supporting existing.
Well, and what we hear at SteelBridge all the time is while there are solutions out there like Accord IQ and other systems that are trying to solve the problem, the fear that we hear from the GPs is, okay, I go buy this system, I implement the waterfall or a few waterfalls on the system, and now I have a new fund. Right. So it changes. So now I've got to go spend more money on the system. But the reason I bring that up is even if you do it with Excel and some elaborate connectivity to source systems, you're still building and changing.
Right.
So you sort of have to pick your poison on, do I do it with Excel and make these very unique and transparent Excel models, or do I build a system that gives me some control and sort of canned process behind our model? But
yeah,
and I have a follow-up question to that, which we've talked about a little bit, and that's now around the audit process and the confirmation process. So we've talked about how long it took to build that or how long it took to implement that. But is there time savings? Rob, have you seen that on now that you're in a mature platform, I'll say, and a mature implementation? Yes, you're continuing to tweak and there's no silver bullet that just works every time, but did you gain an economy of scale?
Yeah, I mean, I think about it, just using the quarterly liquidation models, those are what I would consider very stable. I think we spend more time with the tweaking and developing new on our cash models. I can't imagine in the tight window that we have for a quarter end, there's no way that we can manually do our accrual models for the 20 plus funds in which we need to do the quarterly hypothetical. It just wouldn't work. We just don't have the time or manpower to do that. Even if it is just incrementally layering on the transactions in that quarter, sounds simple, but it's not just, the dozen cash flows, it's the partner transfers and the change in values and so forth. So hard to measure, but certainly very black and white statement. There's no way that with our size, we can do this manually.
Can I just ask a quick question? Because you mentioned it earlier, Tony, about, you recommended as sort of a process improvement was the validation point. And I'm seeing a growing number of GPs that we're working with where either they do it themselves or they're outsourcing to one of the fund admins, and they're now looking for help on validation, right? So are you doing it yourself or,
Yeah, it's all, we as a firm are self-admin. In terms of validation within the model, we've built in various checks and controls. So as an example, one of our support tabs is a capital account view, both on a life-to-date basis and year-to-date basis. So you're able to look at certain line items and do spot checks across or what have you. Look, there's a lot of moving parts. So, any type of control and whether it be the liquidation or cash model, it's going through, 4 or 5 sets of eyes of sign off within the firm before it's a done deliverable.
And then I'll kind of come back to Jason on this. You're on the other side of it, right? So how much pain are you feeling in this process? And is that driving your technology or are you ahead of it? Because while you don't have an automated solution, you're technology heavy and you have a standard GL system. How is this affecting you on that side of it, the confirms and getting there?
Well, and we also use InvestTran, and we do have a somewhat integrated process, but similar, there's lots of checks and balances. that we're going through as part of the process. So looking at same thing, trans types, journal entries, capital accounts, reconciling back and forth. So we're doing that as well, and that is embedded as part of our process. So it takes time. It goes through multiple eyes before it gets signed off. So it's something that, regardless of the fact if you put an automated solution, that process will continue to exist no matter what. It's just a question of can you eliminate the fat fingering or the error that you might have where you have something that's not automated.
So I've actually changed the slide over for the folks out on the web. If you have questions, please use the go-to functionality. There's a question section in your console over to the right. Please feel free to write in. We'll continue to have conversations and ask questions and talk here. But if there's things that we haven't touched on yet that you're looking for from this panel, please bring them in, and we'll take a look and we'll answer those now. But Chuck, did you want to bring up another?
Yeah, I did. So I'd be curious as another poll, if we have that opportunity to see, of the audience, who's amenable to building an in-house versus outsourced solution, right? Because again, part of the reason, Rob, I asked you about the size of your staff has a big bearing on whether you take this on yourself and a lot of the GPs that we're working with are on the staff, right? And for the reasons we all know in this room. And so because of cost controls and high expectations from management, we're seeing that's why we built a managed service, right? Part technology, part consulting and services. So
I can't add a poll. I'm just moderator, but I'm talking to our technical team or our operations team to see if they can add that for the group as we're going. But it's a great question, right? It would be good to know.
Thanks.
Yeah, and I would venture to say, if just my opinion, given the role that we play as consultants in the industry, I don't think there is a definitive I want to go with a system versus I want to build it manually. There's the concern about cost always. There's concern about the black box, I think, Rob, you mentioned, always. And this has been going on for 10, 15 years. I've been hearing this. So I don't think there's as Rob mentioned as well, a silver bullet as to which way do they want to go. They just want something they can use, which is allowing them to create efficiencies and not going to break the bank in terms of deploying the technology ultimately will be there.
That's a good point.
So I don't think if that poll were to come up, I bet you it would be 50-50. I don't know if I want to put technology in or not. Right. I mean, we all love Excel. We're never going to go away from Excel. KKR has built their entire platform off of Excel for a reason. Right. I mean, they're KKR. They can build whatever they want, or they can buy whatever they want. That's right. They chose to build it. So we like Excel. It's just, does that make sense for a Veritas or other smaller fund managers who can't support that Excel long term?
I mean, the one thing that I think can be said broadly about technology as it relates to fund and partnership accounting, but more specifically to waterfall management, there has to be ownership and 100% oversight. It's not run it, put it on the shelf, run it when the next episodic event comes along. And that's challenging to find people who, understand the mechanics of the LPA, can translate that into either an automated solution or a manual solution. But that skill set and expertise is, you have to have almost full-time management of that.
And while you guys were talking about that, we did get that worked out, and we simplified it to just, are you looking to build an automated system or buy one? We have 21% of the audience in right now, and we just jumped up. It was just about 50-50, as you said, Jim, but now it is skewed to 77% buy, and we'll keep this open here as we continue to talk, get a little bit more of the audience in there. But again, remember our sample size here too on statistics, where we only have so many attendees. And Chuck, we know we have your team listening too. All right. So well as our technology. So yeah, there could be a few in these results, but we'll take them for what they are.
Yeah, Chuck, can I ask you a question? So in terms of transparency into the calculations, because we all hear that the models models that we're building with KKR has transparency. How does your system of Core to IQ manage the transparency into the calculations?
Right.
What do you do?
So the short answer is that we don't immediately expose those calculations, but we don't block you from those as well. So it's sort of part of the partnership as you said, the key word is accountability.
Sure.
So as part of our service entitlement of our managed solution, we would expose, and part of our job is to work with you hand in hand if we need to work with your investors as well, right? So out of the box, and then obviously we do back testing as well.
Sure.
So there's hate to say it, but there's an Excel version of everything we do.
Of course. Well, there you go, and that's actually that was the answer I was driving to. How are you doing this?
That's right.
And what you're doing is you are working with the client.
That's right.
And you are also saying, here's your Excel model. Now that it's been built, go ahead and validate it.
That's
You see that all the time.
Yes.
I mean, there are other point solutions, as we like to call them, that do what you do.
Right.
And that's a very similar answer that we get from them.
Right. But Rob, I was curious, so one of the things that I have heard, and we've built this into a product, is, just simple things like doing aggregated reporting, right? Being able to pull all your investor level, doing it, not whole fund, but doing it at investor level, right? So it sounds like you've solved some of those issues.
So we've never, if somebody, I was just talking about this last night, if we wanted to run a report for a particular investor who's in, 10 different funds, what type of carry have they paid like to date, over what time period, what their current accrued carry balance is, and the fees and things like that. We could do that.
But you need to, but it's not sort of out of the box. Though.
That's right. I mean, the key there is that the data is correct in the underlying ledger, and then it's just a reporting function. But all of our, carry is fund by fund.
Yeah. Got it.
All right. Well, we're almost up on time as well. We don't have any additional questions that haven't been answered from the web or from the folks on the line. We want to thank everyone. Want to open it one more time, make sure that there's not questions from in the room before I close quickly here. So again, thank you to the panelists. I think it's been a great discussion. Thanks to everyone on the line for joining, contributing in the polls that helped us, kind of guide the conversation. And we look forward to speaking with you in the near future.
Thank you.
Thank you.
Yep, thanks.